Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We're doing something very different tonight. It's a kind of crisis talk, so let's get straight into it. We've got Sensei here. How are you, Sensei?
Well, thanks for having me on the show.
Thank you very much. Great to have you here tonight with his new microphone setup, his new audio. He should sound even better than before. So let us know in the chat if he sounds great. He's got a closer microphone. We've done some tweaks with all the filters, and we've got this new screen as well where he can share his charts on the screen. And we're going to have a conversation today. We're going to be here for probably about 45 minutes, maybe an hour if it's really busy. But we want to talk about the crisis in crypto at the moment. So much scary news out there on social media. People predicting either everything's about to explode and go up to $1 million, or it's all going to crash. There's nothing kind of sensible in between. So we want to kind of like debunk all the nonsense and all the fears of institutions selling. In my show this morning, I can just adjust that as well. Let me put that right in the middle. That would be lovely. I went live this morning and did a special explaining all this involvement with institutions is actually a good thing, and we actually like it. But we're going to talk about that on this show this afternoon. So welcome to the show. We are hoping to hit 100,000 subscribers very soon. 96,818. I'd love to get to 97,000 tonight. So please tap the like button. And that will share it out to more people, and consider subscribing. And we're also giving away a $1,000 in XRP and lots of other prizes. Just to give you a little idea of some of those prizes, here's the merch table. Not only are we giving cash prizes away, but we're also giving special merch prizes and all kinds of special treats, which is all part of our celebration to getting to 100,000 subscribers. But tonight's show is a blog style show. These are very popular when we do these. We like to have a conversation, get Sensei on the show, and have a good old chat, which is what we're going to do tonight. So we are talking about XRP. We're also going to talk about Bitcoin and Ethereum and the overall markets today. Everyone's been fearful, selling out. I've been very busy on X, sharing my thoughts and my trades. I've been buying tons of Ethereum today. So, sorry, I'll rephrase that. Tons of XRP, tons of Bitcoin, and also the S&P to balance it out. So I've been very heavy in margin today. Don't recommend anybody do that. I am taking extreme risk, but I am very confident in what I own, and I built a stable portfolio which can afford that. So let me just show you what I've been buying, just so you know today where we are. So this is my overall portfolio. We're down today 1.44. We're starting to pick up now, which is nice. And I've now got just about $100,000 in crypto. I told you within a month I would acquire 100,000 from zero, and today I've got just around the $100,000. Of course, it's moving as we go throughout the evening with the momentum, but there it is. I've been buying a lot more. I can show you my overall positions. I bought mainly at XRP. I added a couple of $1,000s of Bitcoin, but I added about $3,000 or $4,000 worth of XRP just on this one part here. So I've been lowering my average, bringing it down. You may remember I came in at 330. I got it I got it to 313, then 312. Now it's 308. So a massive day for me buying XRP to support the community and bring it down. My overall portfolio now is, you can see, 270, 267, 349. So let's call it 350 plus the 40. So we're just coming up to $400,000 invested now. A lot more margin today. I've been very, very busy with the margin, but I am expecting to use tax lots to trim it as we go back up again. That is my strategy, to just drop it back down again by using tax lots. I've also been buying a lot of the S&P because the S&P had dropped below 80% of my portfolio because of the amount of crypto I was buying. So if I'm going to buy crypto and not sell it, I've got to go shopping for the S&P. So I bought more S&P as well. I'll share that on the screen with you. If I go to my VOO, how do you do? Scroll down here. You can see I bought a lot more VOO today. I bought nearly 100 shares of VOO the last 24 hours. I mean, that's the biggest ever I've ever done. Scroll down a little bit further. There's the history. There you go. So 40, 40, 50, 40, 80, 90, 100 over the last 24 hours. There you go. You see that? Look. And I've been buying lower from 591 to 589 to 588, dramatically buying a lot more to bring it into balance. So now my VOO is, if you look at it now, it's gone from under 80 back up to 85.37% of my portfolio. And that's important because if you are using margin to buy, risky assets like crypto has to be, then you have to either sell some quickly using tax loss, but we can't do that, until it pops up, or add some of the S&P to balance it out to protect the portfolio. I also went into my Roth IRA and I sold my Coca-Cola today. If we go into my Roth IRA, you can see I bought more. I've got all my Coca-Cola is gone, and I bought the S&P. So I made a small profit on my Coca-Cola, not that much, but enough. And then I bought back in the S&P at a far greater discount. Overall, I made about $250, $300. Got nearly 2/3 of a share of VOO for free. And there you go. You can see today how I bought back. If I scroll down there and show you that I've been buying more of the S&P. There you go. So you can see on that one trade there, I sold 22 shares of VOO and I got back 22.246. So there is clearly, just on that one trade, and there's been several, on that trade there, you can see how I've gained more of the S&P. All right, so that's what I've been doing today. I've been very, very busy, but what we're going to do now is bring Sensei in and we're going to have a conversation about all of this and see how you feel and how Sensei feels about all of this. So there you go. If you all tap the like button, we've got 282 watching. Please, let's get 200 likes straight off the bat and consider subscribing. We're now at 96,820. You can see in the screen below. And hopefully tonight we can hit 97,000. So let's get straight into our conversation. Sensei, thank you for joining me at this late evening. I know it's very late for you in the UK. And thank you very much. How are you?
Of course. Yeah, I'm doing very well today. Thanks for inviting me on the show.
It's my absolute pleasure. So just your general thoughts. What do you think about that? I've been buying more crypto today on this drop. I've been balancing it with the S&P. I took my profit on Coca-Cola. I bought the S&P with the profit and gained some extra. Remember, my strategy is not about making profit today. It's about acquiring more and more stock at lower and lower prices and all the time protecting my overall portfolio. What's your initial reaction and thoughts to that?
My initial reaction would be this is an investment strategy that not most people are afraid to do. And I think it's an amazing investment strategy. But before I go any further, I want to make sure I say this might not be right for everyone. Remember, we're not financial advisors here. These are thoughts and opinions only. So please don't buy or sell based on anything we say. But buying with conviction is something you've said before and something that people are too scared to do. If you have a belief, if you know where it's going, why don't you buy with conviction? Too many people sit on the sidelines. They're scared when it drops, or they FOMO when it goes up. They believed in it when it was going up, and then they start to not believe in it when it goes down, and they don't buy with conviction. And then what happens is it goes up, and then they say, wow, it went up. I knew this was going to happen. This is why did I not buy more when it's lower? Because they didn't buy with conviction, because they got scared. They saw a red day. They weren't buying. All their thoughts went out the window. So I have huge respect for you. When you say something, you're going to do it. And if you believed in XRP when it was at $3, you believed in it when it was at 30 cents, $2, $3.50. Why would you be selling today? Why would you not be buying? And what you've demonstrated there is buying with conviction. And if more people bought with conviction, then they'll be crying a lot less when it goes up and saying, I knew that this was going to happen. Why was I not buying? And they'll be in a lot more profit, because most people are too scared to invest when it's a red day.
Thank you. It doesn't feel very brave, though. It just feels mathematically and fundamentally, and you'll probably talk about the technicals in a moment, just the right thing to do. As you say, if you liked it at a higher price, if the fundamental hasn't changed, which it hasn't, has it really? Is the ETF still on schedule? As adoption still be? I mean, has the world changed since yesterday? Well, I don't think so. In fact, better. We might have peace now with Russia and Ukraine, which would be a positive for everything. Who knows in the next week or so? But to me, with things are moving forward. I know people were a bit worried this morning about the delay again for the ETF, but it was kind of what we said in October. But it's like everything, the market will buy into that. So you don't want to be buying in October when it's already happened and we've had a 10%, 20%, whatever rally it is. You want to own before that happens. So when we get a little bit of selling again, because very often these things do pump and then dump, you don't want to be out of the money all the time. So for me, if you like XRP and you understand it and you understand what Bitcoin's all about and Ethereum's all about, on days like today, you want to be buying. I think I was reading today that Cathie Wood has been selling again. I think she was selling Ethereum today. And 1 minute they're saying buy it and the next minute they're selling it. And people get confused. I've been seeing people today on X go, I don't understand it. People are getting really angry and frustrated because they follow these people like pop stars, like idols, like rock stars, whatever. And they follow them and they buy when they buy, and then they can't understand when they're selling because you're not an institution and your strategy is different. So am I going to be bearish or am I going to be against XRP when tomorrow it goes up 10% and I start trimming up the top with the tax lots, just taking some heat out of my portfolio, de-risking? No, I've actually acquired more at lower prices. I'm just trimming down the margin again. I'm using days like this to acquire more. But I can't hold on to every single share. And it's exactly the same for people like Cathie Wood and any of these fund managers. They can't just keep buying more and more infinite. They have responsibilities, rules to follow, percentages. Their portfolio has to stay a certain size. And I give myself those rules. I wanted to get my S&P today back up above that 80%, 85% to protect my risky investment. So I bought more on a day when the S&P was selling off a bit. So, it doesn't make you, against crypto or against something because you've trimmed a little bit. But of course, when people read, do you remember when people freaked out when Warren Buffett sold is S&P, is VU and SPY, and we found out it was 0.5 or 0.1% or whatever it was. It's irrelevant.
And it just kept going. The people that, it happens all the time, whether it's Warren Buffett selling a little bit for whatever reason, buying another company, this, that, and the other, or who's that famous trader from that movie? I forgot his name. The Big Short.
Michael Burry.
Michael Burry, what was it? A year and a half ago, another year ago, everyone's following his portfolio. He's selling, he's predicting a big recession. What are we up now? 2.5x on the S&P 500. If you're following these institutions or if you're following these traders, then you're probably left behind. You can't quite understand what they're doing, and it might not be public information what they're doing. There might be a completely different reason they're selling, or it might be their ETF that's selling because people are selling, or people too easily get influenced by what institutions doing, but they don't quite understand what's going on behind the scenes. And I'm not saying I understand what happens behind the scenes, but I make my decisions separate to that because we don't have all the information there. So if you're just stuck looking at what Michael Burry did 1.5 years ago and you think he's the best trader in the world, and then you've ended up selling everything because he did, well, you've been left behind, unfortunately. So it does happen. Yeah,
I've never understood it. There are people that they follow Warren Buffett's trades. They follow, or they do the adverse. There's an inverse ETF to Jim Cramer. There's an ETF, or I think that follows, or a fund or something that follows Nancy Pelosi whenever she buys. But these are all pointless, useless things. And people think, well, I'll just follow somebody. Well, following the leader is never going to be a winning strategy for anybody. In fact, I could pretty much guarantee it would be a losing strategy for everybody who tries to do that. It's not they don't know and they're not smart and they know more than you. They probably do. But it's not just they got the jump on you, because by the time you've read about it, they've already done it. It's not just that. It's the whole fact that they have to follow a different set of rules. In fact, most of us here have an advantage. I remember Warren Buffett said at his last ever conference to the Berkshire shareholders, it's now becoming increasingly difficult for Berkshire to be able to win and do what they want to do because they're so large. And, they're restricted. They can't add certain assets to their portfolio. I mean, until recently, people couldn't add crypto to their assets, their funds. It's why ETFs was so important. And now we have all of that. People get upset by institutions potentially owning all of it, and everyone freaks out thinking that's a really bad thing if the institutions, run the show. And I put the argument out today, and I'd like to hear your thoughts on this, was if you had an asset that was completely governed by retail investors, which there are. If we go to Binky Bonk Fart Coin or stuff like that, I'm pretty sure no institution or Warren Buffett or Michael Burry or Cathie Wood is going to buy it. It's all of us. Would you rather own that when a bunch of retail investors larking around in Reddit and larking around on X, making up memes and stories, they're the ones who control that, with no governance whatsoever, with no restriction, with no rules to follow, just a few people making up their own rules? Or would you rather own a fund that is now predominantly owned by institutions? Now, people say, I don't want to own that, because what if, BlackRock own 90% of it and they decide to dump it? Well, that's what happens with every major asset like Coca-Cola, Microsoft, Google. Institutions always, nearly always, not always, but nearly always own the biggest part of it. Retailers smaller, but yet Google or Microsoft and Apple continue to do well. They're good businesses. It's good. You want the big players in there. You always wanted regulation. You wanted everything to be structured and a safe investment, and now it is. You don't like it. So my thought is, you follow the money. You don't do what the money does, but you follow the money. You see where it's going and make your own decisions. And I like that. I would rather trust a system because the people that are the system of your binky bonks and your fart coins and so on and so forth, there's no direction there at all. That's completely gambling. You're relying on a few people doing what you hope they do. Whereas you know what the money is going to do, because the people that buy the speculative assets, and it's only retail involved, are out for one thing, themselves and making a quick buck. That's not how Berkshire Hathaway act. That's not how they want to make money. But in my opinion, BlackRock, and now we look at Michael Saylor with Bitcoin, and we also look at Tom Lee now, who wants to be the big Ethereum fund. They're not in it to make a quick buck so they can go and take themselves off to buy a Ferrari. They're doing it to control the network. And that is very different. Power and control is very different than trying to make a quick profit. I like to think that I think the same way as they do. I'm about acquiring more and getting more control than being focused on the profit today. So I think that's the difference between a speculative asset with a majority of people just running around, hoping they're on your side, and then proper legal authorities and governments and banks and stuff like that. You want to be in that club, if you like. Does any of that make sense, Sensei? Do you concur with any of that?
Yeah, I concur with all of it, really. I think, even onto that point, slightly different, but along the same lines, is this whole regulation idea. One point, everyone was like, we don't want regulation. Why do we want regulation? This is cryptocurrency. It's a lawless land. But at the end of the day, all the big companies, whether it's Ripple, whether it's all the other amazing companies that are doing things, ADA, or all the other amazing crypto projects out there, they want regulation, because that means they can operate their businesses. That means institutions can get involved. These meme coins and these random tokens, and probably 95% of the crypto market, which is just retail, it's just there for pump and dumps. It's just retail. No institutions get involved. If institutions are not involved, or not going to be involved with these tokens, they have really no value, and they're just there for gambling. It's at the end of the day, it's gambling, and you're actually better off probably going to a casino and putting one round on roulette with all that money, rather than trying to pick these tokens. So I'm very happy that there's now regulation coming involved. And what have you seen? You've seen regulation come in, and you've seen institutions start buying. They happen hand in hand. So I see a maturing market here. I see now a lot of players getting involved. I see a lot of ETFs now being filed. I see the XRP ETF coming in October. I see Ripple's businesses starting to grow now. The cases behind them, and now that there's regulation. I see a whole different SEC now with all the crypto roundtables they've been doing. We've been covering it all live, and this is a different time. And if you're investing in an asset, even if you're looking at Bitcoin 4 years ago, what you were hoping for was institutions to get involved and to start buying. So I don't understand the view of some people here on X that are now saying we don't want institutions involved. We don't want all of this regulation going on, because it makes no sense, because without institutions getting involved and regulation coming in place, it wouldn't be performing as well. And that's what we've always hoped for. Now we're getting. There's nothing wrong with trying to find some of these smaller companies that the institutions might not have found yet. That's the advantage we have, as Warren Buffett said. But if you're looking at a company, you want to see, are institutions going to be interested in this? Is their balance sheets good? Or if you're looking at crypto, is this token actually got real utility? And a lot of the top tokens do, and that's why they're now performing well, and that's now why we're going to start seeing ETFs roll out. So regulation is also a big thing that I'm excited about, but other people might be very opposed to it.
Give me your thoughts on this, because you did a wonderful piece today in the newsletter, and please drop in the chat, Sensei, the newsletter link. In fact, I'll do it here, Sensei. Let me just do that now.
Yeah, I'll bring it up on the screen as well.
Yeah, please do. I'll just go to your screen here. Let me just give everybody the newsletter link. So I read this morning, and I was covering it in my show. I did a special this morning. There you are. I've just dropped it 3 times in the chat. Let me just pin it to the top. There's the newsletter for today. You can get this for free, by the way, guys, a 7-day trial, and you can also win $1,000 of XRP by getting our free newsletter. Who's ever heard of something so crazy as that? But anyway, you can. So you were talking about this morning, that there's this mass exodus in Ethereum and XRP. We had that last weekend, I think it was. We had that liquidation, lots of people losing their money, and people were fearful. And you were explaining today in your newsletter, and I was covering it as well, the fact that it's not institutions are dumping and getting out of Ethereum, or dumping and getting out of XRP and all these things. They're restructuring to be more efficient. Can you just, I explained it this morning in my show, but perhaps you could add some color to that, exactly the way you see it as well, so that people have a different perspective, the same sort of story, but a different perspective.
Yeah, I mean, this was all over X. This was all over the news, and some people, again, as normal, were just there to get clicks and fake news and just giving the headline and not explaining what's behind it. And essentially, it does look scary when you just read the headline. Essentially, the headlines that were going around over the last couple of days was there's $4 billion worth of Ethereum that's being moved off, that's been stuck, waiting for it to come out of the queue because it was staked. And now they're trying to unstake it. And it looks scary. It's like, oh, everyone's taking their Ethereum out of staking. That means they're going to sell it. But in fact, what we did is we dived into the numbers, looked at the story behind the numbers, and essentially what it is there is a queue. There is a lot of Ethereum that's currently staked being unstaked. But who is unstaking it? Well, if you look a bit deeper, the queue, the 93% of the queue, or over 93% of the queue, is actually led by 3 companies: Coinbase, Lido, and EtherFi. And these massive companies aren't unstaking so they sell. That's not what's going on. They're unstaking so they can restructure. A couple months ago, there was an update on the Ethereum network where there's a new update where the staking can become more efficient, cheaper for these institutions. And essentially what's going on is they are moving from one staking method to another staking method. Coinbase is basically doing that. They're restructuring their finances. Again, it's a large institution. They're all about saving money and making sure everything is as efficient as possible. So they're moving from multiple 32 Ethereum validators to a much more efficient, larger validator model, which reduces their costs. So they're unstaking to stake again on a better, more efficient validator model. There's also a company called Lido who does staking and stuff like that. And they've seen an arbitrage opportunity, something that doesn't really matter to the retail investor. 0.3 to 0.6% arbitrage might not seem like a lot for a retail investor, and it isn't. But when you're talking about millions of dollars, they've identified an arbitrage opportunity, and this happens everywhere. In every single market, there's arbitrage opportunities, whether you're looking at the Japanese carry trade, quite a large arbitrage opportunity there, and we'll probably touch on that later in the stream, and the risks of that. But they found an arbitrage opportunity, and they're taking advantage of it to get some better yields. So it's institutions playing institutional games, and what's happened is that the markets and people on X are trying to spread fear, and that has brought Ethereum's price down. But I don't think it's solely this; it's bringing Ethereum's price down. It's cooling off a little bit. That has led to liquidations. I mean, we've been covering over the last couple of days. There was a lot of leverage piling into the markets, especially for Ethereum, with all the great headlines we've had over the last couple of weeks. And unfortunately, people get too over leveraged, get too excited, and they don't manage their risk properly. And just in the last 24 hours, we've seen another $141 million worth of longs get liquidated. So this could have had a small impact on the price, just the headlines and the fear mongering. But when you actually dive into it, there's nothing fundamentally that has changed. And that's why I'm still bullish on Ethereum. That's why I still have my target of 8,000 to 12,000. And that's why I would be looking to buy the dip, just like you have, Martyn.
Yeah, I mean, today was just, as a gift, to be honest. I mean, it's never easy. This game isn't easy. I had to borrow a lot more money today. My margin has doubled today. I bought a lot, but you're not going to make life-changing money by doing nothing. I'm not saying you should go out there and borrow money and take risk and so on and so forth, because I've always said, just buy the S&P over 20, 30 years and you'll do well anyway. You don't have to do any of these things. Just focus on earning money in your job, whatever it is you do to earn money, and just buy the S&P. But if you are really trying to, do really well, then you got to buy with conviction. I don't believe in dollar cost averaging, as you know, Sensei. I buy when the opportunity is there. And seeing what went on today, and I reported on it, I read your newsletter, and again, you've just confirmed to me, what we're hearing is something good in the space. It's how the crypto space is now evolving, and institutions are making the network better, more efficient, and that makes them more likely to stay in, more likely to buy more, more profitable. So that's a space I flock to. I recently, only 4 weeks ago, near enough to the day, I said to you I would end up owning more crypto than most of you combined. And I also said I'm going to get 100,000. Well, today I've just about done it. 1 month ago, because now it was ready to buy, and today I have even more confidence it's ready to buy. Institutions are looking at ways to making the system more profitable, more efficient, and that's what we want. We don't want a OK Corral running around, panning for gold, scratching in the dirt. We want institutions and people far smarter than us and powerful than us to build a better system. It's no different if you think about it. If we go back to the Wild West when we were panning for gold and we had all the banks in the next to the saloon, and you remember the cowboy would ride into town and kick the door down and shoot his gun into the bank and run off with the gold. That's how the banks used to work. And I think we'd all agree things are a bit safer now and a bit better. I'm sure a lot of people say, oh, no, I don't like it. The banks I don't like the banks. But at least you don't get a bank robber, turn up and rob your money. It's still there in a way. I appreciate 10 to 1, it's lent out. But we all get the idea. You can go down to your local ATM and take some money out without the fear of it, nothing being in there. So, the system has evolved and grown. The banks, went from, a crazy Wild West gunfight to now you can go down the bank and draw your money out and get a mortgage while you're down there to buy a house. This is all good. And now crypto has to evolve and grow. So to me, when I read the newsletter today, I thought, right, so we're down today. There's restructuring going on. Everything's on discount. Time to turn on the margin and buy a ton more. And then, of course, I had to balance it with my S&P. But I'm happy today. I'll be looking forward to the next week or 2 or 3 as we get towards October, when we're going to get all those good news stories. Not just the banks, not just the ETF, of course, but hoping a Ripple bank. All of these things, I mean, no one ever talks about the Ripple bank as it, like the ETF is the main thing. I actually prefer the story of the Ripple bank. That to me is bigger than the ETF. So I want to own more and more of this. And when it starts going up, I will start trimming just to bring my margin into a 3 or 4 or 5 month payoff period. I mean, I'd like to own all the XRP and Bitcoin I've acquired today, but I just simply can't. I don't earn enough money I don't want margin for the next 5 years. I want to be able to buy the next dip. And if a big dip comes next week with a carry trade or whatever, I want to have money to buy that. So as soon as it pops up a little bit, I will sell the ones at the top, trim it down, keep the one at the bottom, and thereby all the time getting lower and lower prices. And you never know, it might end up, a year from now, I might end up having all my XRP around the dollar. It keeps crashing and getting dips, and I end up owing more and more at lower and lower prices. That could easily happen. So, anything you want to add to that, Sensei? I know you've got a chart on the screen, and tonight we want to talk about the technicals as well. We've heard about the fundamentals, what I think and what you think about that. But what are we looking at on the chart? This is XRP, right?
Yeah, this is XRP. And I'll go into the chart in a second, but I want to pick up on the point you just said about if it goes down, because we've got people now commenting about never buy with borrowed money, never leverage. And of course, that's not what we're telling you to do here. You can do what's correct for you and what's right for you. But some people are scared of leverage because they don't understand it. Once you understand how leverage works, it can fit your strategy very well. And what Martyn's saying here, right, and I'll let Martyn speak for himself, but is if XRP pops up, he doesn't have to hold everything he bought today for the long term. What he's going to do is start bringing his average down. So it's essentially a trade where you're going into leverage to buy the dip. It pops, you sell it as a profit, bring your average down, and if it continues to go down, what I think Martyn's going to do is buy it lower. When it pops, he'll sell it higher. So it just brings that average down. And that's essentially what you were saying about you might have an average price of $1. Am I correct, Martyn? Yeah.
I'll go further than that. I'm not just selling for profit. In fact, sometimes I can sell for a wash, as long as I've covered the spread and the cost of buying crypto, because there's always a bit of a cost now. We never quite get the right, you all know what I mean by that. But I don't know where the bottom is. Maybe the bottom's in now. You're never going to see Bitcoin go this low again forever. Maybe XRP will never go this lower. Who knows? The point is, I don't know. Neither does anybody else. So what I did, I started buying today, and I was buying here. Then I bought some more here. Then I bought some more here. And now I've got too much because I bought some more here. So I want to keep the ones here, and these ones I'll take back to the shop and get a full refund. That's essentially what I'm doing. So as it pops up again, I'll wait until we get to these top ones, sell those, maybe for a wash. No profit at all. necessarily, unless I wake up during the night and it's gone up 50% and I can take some profit, because I want to bring my margin back down again. But by selling the ones at the top, my average will drop significantly, because these were the higher price ones. I take these ones back and I keep these ones down here. Because when I was buying more, I wanted more down here, but I didn't know how low it was going to go. So I'm buying here, 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 here. As it starts to go up, I sell these ones up here. And maybe for a wash, no profit at all. But let me just refocus my camera. There we go. So that's what I'm doing it for. Now, someone just said in the chat, isn't that dollar cost averaging? No, it's not. Dollar cost averaging would be you buy every week, every month, regardless of price. And mostly you're going to buy when it goes up, because over time, particularly the S&P, it goes up. So if you have a 401k and you're a regular, normal person, right, you go to work and every month you get paid and every month you buy the S&P, like everybody does who's got a 401k, an employer, whatever, they're buying higher and higher and higher and higher. Sometimes there are dips, but generally speaking, they're buying higher and higher and higher. And 20, 30 years ago, there you go, dollar cost averaging worked. No, it didn't. It was a consequence of the market going up. Your strategy didn't work. The market went up and you were, it was a coincidence that you won, and you did. And that's okay. For most people, that works fine. You don't watch the stock market. You don't read the news. For most people, that's the right thing to do. You don't want to look at the stock market. And overall, some days you bought too high. Some days, very rarely though, very rarely you bought on dips, because once a month, it probably, every month it probably goes up, or at least stayed the same. So you probably didn't get many dips, but you certainly got all the peaks. And over time, it doesn't really matter because you bought overall and 30 years later, you're up, right? Okay. However, if you buy with conviction, which is what I do, is when the fundamentals are the same or improving, and you buy like I did with the Liberation Day. I did a 70 grand swing in weeks. I bought right at the very bottom. How many people can say that? Most people sold out. It went down and down and down and down, and then it started to come back up again, or they sold out, or they did whatever they did. I made sure I bought at the very bottom. And as it came up, I trimmed on the way up to reduce the margin to give myself structure and balance. That's not dollar cost averaging. That's buying with conviction. So did I want to wake up this morning and take my 50, 60 grand of XRP and Bitcoin and Ethereum and all the rest of it to 100 grand? Not particularly. That wasn't my plan. I didn't have the money in the bank. I didn't really want to borrow any more money. I'm going to reach my target anyway. But the opportunity presented itself to me, and I thought I can't miss it. Now, I don't know if it's going to go lower tomorrow. Maybe there'll be a bloody great crash tomorrow, and everybody on X will laugh at me going, there you go, you idiot. You could have bought it for less. Well, what did you do when it went down today? Nothing. You sold. You don't know when it's going up, down, or sideways. Neither does anybody else. What I decided to do was buy on the way down and then pop on the way up, and keep doing that over and over again. And that works. That works for me. So this is not dollar cost averaging. This is buying with conviction. So that's my strategy. And I hope that hopefully that answers the question for those who are saying, isn't that dollar cost averaging? It isn't. Sensei.
Yeah. No, I completely agree. I mean, there is different ways of dollar cost averaging, but your strategies right now, I don't look dollar cost averaging. I was going to see if I can get the official definition up, but there's many ways you can interpret dollar cost averaging. Are you just buying a little bit at a time for a trade? Are you going to consider that dollar cost averaging? Well, I wouldn't. Dollar cost averaging, in essence, when you're talking about investing, is but even if you have a lump sum right in front of you, you've just inherited $500,000 right in front of you. Instead of going, I'm just going to buy at this price, whatever the price is, right now, I'm going to buy. What you do is you go, actually, I'm going to start putting in $1,000 a week. I'm going to start putting in $1,000 a day. I'm going to start putting in $1,000 in a month. You've got a lump sum right in front of me, in front of you. And instead of buying with conviction on stocks that you like, you've decided to just have a time frame and just start buying a regular time frame, and you're starting to buy. That's essentially what the definition of dollar cost averaging is. Even if you had a lump sum in front of you, you decide to spread it out. And we did a whole newsletter piece. We looked at research. We looked at university research papers into dollar cost averaging compared to just simply buying with conviction at one time. And the overwhelming research suggests, and this is factual numbers, you can't really argue with it, buying with conviction was essentially you would be much better off if you just bought with conviction. And that was essentially the research there. And Martyn's strategy is essentially that. Plus, because he looks into the markets, because he understands dips, he also, if there isn't, he's already bought with conviction, all the money's gone. But if there is an opportunity in front of him, he will turn on margin and buy the dip. And even if he buys that dip regularly, a little bit lower, if it goes lower, that is not dollar cost averaging. That is just continuing to buy with conviction on a dip, and that's more of a trade. So I just wanted to make that clear for some people in the comments calling that dollar cost averaging.
I pretty much guarantee, as much as you can guarantee in this world, if you had $500,000 and you can actually think of this as your future income. Imagine if you earn, I don't know, $100 a week, and over a period of time, you've earned $500,000. Okay. So you've got it all in advance. Someone's come along to you today, a millionaire has come along to you today and go, right, you're going to earn $500,000 in the next 5 years. I can pay you $100 every single week for 5 years. I'm just guessing the numbers, right? Or I can give you $500,000 right now. If you put that $500,000 with conviction into the S&P 500, not a single stock, because that stock could go bust, or it could change, or something could, Apple doesn't have to be around forever. Something could take over Apple. We don't know. But if you put all your money in the S&P 500 today, I guarantee 100%, as much as you can guarantee, you are going to have far greater gain tenfold than if you divided that up every week for 5 years, 10 years to spend the $100 a week until you used all the money up. There's no question about that. And that's not because you are smart or whatever. That's because the market will go up, not necessarily because the business makes money or the country grows or whatever you're investing in, its GDP increases, because money will be devalued. The very default since the beginning of time. And I'm not just on about America's history. I'm on about hundreds of thousands, if not millions of years. Since the beginning of time, whenever there was money, there's one thing that you can always guarantee. Money is devalued with inflation. 100%. That's always existed, will always exist, because we live on greed. Things have to go up. It's just the way it works. Everybody wants a bit more. So and until people change that attitude, it's always going to go up. Things aren't going to get cheaper. Technology is going to evolve. So things that we could have bought once upon a time, like a TV when it first came out, would be millions. Now everyone's got one on their phone. Okay. So technology evolves, but money devalues. So if you've got $500,000 and you bought the S&P today, whether it's up, down, sideways, whatever it is, I pretty much guarantee you, not tomorrow or next week or next year, but pretty much guarantee you within 2 years, you'll definitely be up. You might, I would say pretty much likely be up within 6 months or 12 months. So if you put all that money in on day one, 30 years later, whatever, 5-10 years later, it would have been if you'd done it weekly, of course you're going to be up. Not because you're smart, because the market was designed that way. So dollar cost averaging is paying every week as you get paid. However, that's what margin's for. Margin gives you your future income to buy at today's prices. Now, it requires structure. It requires discipline, planning. You've got to have a good income. You've got to have, people say a rainy day fund. I don't believe in any of that. I have stocks that I can sell for a rainy day fund. So I'm not, stocks can go down 50% and I've still got cash, right? I always believe in being invested. I don't believe having money in the bank for a rainy day fund. People with money in the bank, a rainy day fund, is because they don't know what they own. And what if this happens? I need my money. Well, I guarantee you one thing you've not considered. The money in the bank is going down every single year. And if you waited around for 10 years for your everyday crisis that may one day come, which if you've got an income won't actually come because you're planning and you're earning income. And if you don't have income, you shouldn't be investing anyway. Stock market isn't a cash machine. So if you planned for this rainy day fund and it never came, guess what? Your money in the bank has been devalued and devalued and devalued and devalued and earned you nothing. Whereas if you were invested, it was making you 10% on average a year on the S&P. And if you look at 4% as inflation, you've made 6% a year by doing absolutely nothing. So I believe in always being invested. Now, again, this is not financial advice. I do that because, one, I've got discipline. I've got a long-term strategy. I started off by building a base, a portfolio. But most importantly, I started by building an income and a business. My income is on YouTube. For a year and a half, I worked for free, knowing one day I'd have an income, and now I can build from that, and that's what I've been doing. So you got to build the base, and it takes time, but there's no question about it, and I think you did a great piece a few weeks ago in the newsletter that pointed out the difference between buying with conviction and dollar cost averaging. And let me be absolutely clear, Warren Buffett does not dollar cost average. He buys with conviction. And it's really frustrating when I hear people say, Warren Buffett says dollar cost average. Dollar cost average, when Warren Buffett says it, is part of a whole page of other information, but people just pick the top line and go, Warren Buffett said. Warren Buffett is suggesting to you, because most people don't read the financial papers, they don't know what's going on, and buying over time will work for you if you invest in that way, but that isn't the best way. It's just the way for people that don't have anything or want anything to do with it. I guarantee you, Warren Buffett hasn't got a direct debit and a standing order every week buying Coca-Cola. He just buys it all when it's undervalued and then leaves it for 20 years. That's exactly what he does. And that's what I do. So, that I hope that explains it. Sensei?
Yeah, no, I completely agree. I mean, the facts are in the numbers. We did a newsletter piece. I recommend everyone goes and reads it. If at the end of the day, if you've got dollar cost average, I've got the definition up right now. Dollar cost average commonly refers to dollar cost averaging, an investment strategy where you divide your total investment into smaller, regular purchases over a set period, regardless of the asset's price. So what you've done is essentially you've got money in front of you and you're deciding not to invest it in the market. You're deciding to hold off from investing in market and spread it out. The area where it becomes a little bit different, and it's whether is it dollar cost averaging, is it not dollar cost averaging, is for most people, you get a paycheck, what do? Well, technically speaking, what dollar cost averaging would be is getting that paycheck and then spreading it across every single day of that month or that year or whatever. If you get that paycheck and you invest it that day at that time, then it's sort of a blend between, are you dollar cost averaging or are you buying with conviction? It's sort of a blend because you're still buying it monthly at a certain time, but you're not spreading it out. So essentially, if you've got a lump sum investment sat right in front of you, you've got inherited some money, you've got some money in savings, the question we're answering here is, and what the newsletter research was on, do you spread those payments out or do you buy with conviction? And the research shows buy with conviction. Then you can take that one step further. There's a dip in the market. What do? Well, you do everything to buy that dip. Is what we're suggesting here. And again, not suggesting for you, but suggesting what we do. And I follow Martyn's strategy. If I see a big red day, I'm not looking around and going, oh, I've got some money I've just found, or I've sold this, or I've gone into margin, I've opened a leverage position, I'm going to spread this purchase out over the next few days. No, I look at that dip and I go, I need to buy that dip. I'm buying with conviction. And I'm not spreading out my buys. So there is a very clear definition of dollar cost averaging. You've got a lump sum in front of you and you decide to spread it out instead of buying with conviction, and the data suggests that's a very terrible idea.
Let's put it like this, Sensei. If you know, I use this analogy a lot, but I've never put it in this context. If you know that a can of Coke, which sells everywhere for $1 in every shop across the land, and today it's 20 cents, or let's just make it simple. Yeah, it's 20 cents. It's it's an 80% discount. 20 cents today, 80 cents off. Do you go, I don't really know if I want to buy this or not, so I'll just buy a little bit today and a little bit next week, whether it goes up or down, I don't know. That's dollar cost averaging. You don't know what the value is of that's presented to you. You don't know the opportunity you've just been given. You don't understand the value and the undervalue of the product in front of you, right in your face. Okay, you know that it's $1 in every shop across the land. It's being given to you for 20 cents. If you dollar cost average and buy a little bit of that asset today, you only benefit from the little bit that you've invested. Whereas if you buy the whole pie, you would benefit from all of that asset at that price. It's like when Warren Buffett discovered Coca-Cola and looked into the future, could see where the business was going, he went all in. He didn't just go, well, I'll buy a couple of shares today and see if I get lucky, and then I'll try again next week, and, oh, it's going all right. Now it's gone up a bit. Oh, I'll try again. He knew what the value was. And you can calculate the value. Some things you can work them out. I mean, some things are as black and white as in your face, right? You know a can of Coke is $1. So when someone says to you, do you want to buy 100 cans of Coke for 20 cents each, 80% off? You don't go, well, I'll take a couple today and then I'll see what the price is next week and I'll see if you're going to give me a deal again. Well, next week it goes, no, next week it's back up to full price again. Do you think when Coca-Cola do a futures contract and buy sugar for their protection of their profits for the future, and they get an offer of sugar at 80% discount, do you think that Coca-Cola sit around and go, well, I don't know. They load up and buy all the sugar for the next 10 years. They make sure that they've protected their future profits by buying as much sugar for their future. That's a futures that's what futures market is. They've insured the price of sugar, which means they've insured the profits for Coca-Cola for the next 10 years. They're not guessing. They know what the price of sugar is. They know what their profits are. They don't care if sugar goes even cheaper. That would be gambling. They go, hang on a minute. This is a great deal. This is the best price we've ever paid for sugar. At this price, we can make 99% margin on our Coca-Cola. And some smart aleck at the factory goes, oh, hang on a minute, Mr. Buffett. I reckon we could buy it better than this. We can make 99%. It's the highest margin we've ever made. We're going to buy all the sugar we can get at that price. That's when you know the value of the asset. You understand the profit and you buy it. You don't care if it goes lower. If it goes lower, we buy even more. But you don't sit around and wait and guess and hope and go, can we buy a little bit today and I'll test it out and then buy a little bit? No, the deal's today. Take it or leave it. That is buying with conviction. So because we don't know what the future value of Ethereum is, technically, like we do other things, and XRP and Bitcoin, we have to go, okay, we understand the growth and the potential and the future potential earnings, but we can't go all in on that like our sugar. We can't say if we buy sugar here, we make this in profit. We have to have our structured balance, our S&P 500, our normal profit-making businesses, keep that balance. But with all the other margin and power that I have to buy, I'm going to buy my XRP, my Bitcoin and everything else, because even if it goes down 50%, I'm not wiped out. I can afford to do that. And I've got enough resources to be able to buy another dip if it does. And eventually it hit bottom, unless it goes to zero, of course. And if it goes to zero, that's another issue. Then you shouldn't have bought it. And then you've made a mistake. And you can make mistakes. You can buy something that does go to zero. But in my calculations, Bitcoin is not going anywhere. XRP isn't going anywhere, but it is a risk. So I need to own some S&P to back it up, and neither is Ethereum. I believe in these technologies, but that's the difference between dollar cost averaging and buying with conviction. I had another example of that when I sold my car 4 years, 5, 7, 8 years ago, I bought a brand new car in America.
I'm gonna pose the question to the audience as well. I'm gonna create a poll, but you carry. I was just gonna let you know I'm gonna do that, and then you carry on.
Right. Okay. I actually I bought a car, a brand new car. Didn't need it anymore. COVID came, and I was doing this. I was doing the YouTube and everything else. So I during COVID, I knew I wouldn't need a car because I knew I was going to be committed. There was no if, ands, or buts, and let's guess. No, I'm going to make YouTube a success. People going, oh, yeah, but if you sell your car, you got to buy another one. What if you had to go out and do some gigs? No, I'm going to make a success of YouTube. 100%. I'm selling my car. My friend said, oh, I wouldn't do that. You just bought a nice new car, Martyn. You're going to get less for it. I said, no, I won't. I'm going to get the same money. No, you won't. Who gets the same money when they sell a car? I'd had my car for 2 years. No one gets the same money. Yes, they will. Right now, there's a supply shortage and everyone's paying more for cars. And I went down to CarMax, and CarMax increased it and increased it and increased the offer to try and buy my car. There was only one of my car in the whole of the United States. I imported it from Spain. Only one. I had a supply and demand. And I had no cars coming in because of supply shortages. So I had a car that people wanted, that people would pay a premium for, and the price went up and up and up. And I virtually got what I paid for 2 years. Now, this is kind of like buying with conviction, selling with conviction, dollar cost averaging. I was offered an insane price. I basically had free transportation for 2 years, no loss. And I sold it. And I sold it because I was committed that my YouTube business would survive and thrive, and I didn't need to buy back my car because I wanted to go out and do a few gigs. I was going to make this business work because I was in control of that. You cannot control what the stock market does, but you can control what you do. And I can control what I buy and what I sell, and I can control the work that I do to make the income. I knew my YouTube channel would be successful. Otherwise, I wouldn't have sat here for 18 months, did it for free, and built this. I knew because it was down to me and me alone. And I knew what I was capable of doing. So I sold my car. I didn't need a backup plan. I didn't need other alternatives. Focus. And I'll give you one last example of that. Years ago, when I was a cabaret entertainer doing all the pubs and the clubs, and one day I decided to be a theatre producer and book the London Palladium, the most famous theatre in England, if not the world, right? The only way I could do that was I phoned up my agent. I had 5 agents. I phoned them up and said, don't call me tomorrow. Then what? We've been calling you for 20 years. Don't call me tomorrow. Because every time you call me, you offer me a gig down the local pub, down the local hotel, and I take it for 200 quid. They said, well, yeah, that's what we do. So every time you call me, I can't say no. It's a gig. I get 200 quid down the road, sing for 200 quid. I can't do it. When you don't call me, I starve. I've got to make my theatre show work. 100%. There is no safety net. And I tell you what, that focuses your bloody mind really quick, especially when you have a mortgage. I made the theatre show work. And there it was. It worked for 8 years. Same as this. So that is the definition of buying with conviction. You have to be in charge of you. You have to be the engine that drives all of this. You control you, your buying, your selling, your structure, your strategy, and your income. You have full control over that. Right? You do. And if you say, well, what if you've got a job and they fire you? Well, then you've got to work within those parameters as well, right? I understand I work for myself, but I could lose my channel tomorrow. Still got, I can only invest what I know I'm earning already got paid. I don't guess, right? So you have to control all of these things. And that's the difference between dollar cost averaging and guessing and being in charge of you. And that's what Warren Buffett does. That's with buying with conviction. That's what Michael Burry did on The Big Short. He knew the market was going to implode. He didn't guess. He knew. Didn't mean it was easy. Didn't mean it was simple. You've seen the film, The Big Short. Oh my God. He went right to the wire, but he knew Why did he know? Because he looked at the numbers. I remember there's a piece in the film when he says, I've read the numbers. It's going to go. And it kept going up and up and up, and all the banks protected themselves, and people were going, you're going to lose all our money. He says, no, it will go. And it was terrifying and horrible, and everybody was against him. But he knew. It was clear as day what was in front of him. It's not the same as will people buy an iPhone or will people buy an Android. That's personal choice. Numbers don't lie. Profits, losses don't lie. You can see the numbers. Same thing when I declared bankruptcy. I knew 2 years down the line, I would have gone bankrupt. There was no point walking into that problem. I cut it off before I spent 2 years wasted of my life. You can see the numbers in front of you. Don't want the market to be what it isn't. Don't imagine it to be something that it isn't in the hope it'll be something it isn't, because you just got this dream. If you're a dream, you're a dreamer. Live on the numbers, control your emotions, do the maths, work it out, and stay the course. Buy with conviction, sell with conviction, and you'll do all right. Anyway, I went off on a tangent.
And if you're not cut out for it, then just DCA. It's not for everyone.
No,
it's not for everyone.
My strategy is for very few people, to be fair.
Yeah, and it's the winning strategy. But if you don't know what you're doing, if you don't know how margin works, if you don't know what we mean by buy with conviction, if you're buying individual stocks, then people do perfectly fine. You go make your money. First of all, as Martyn said, have your engine and just invest when you can in good, solid stocks and ETFs. That works for most people. But if you want the real gains, the real the real success, the real big swings, is you identify something that's undervalued and you go in big. And again, it's not financial advice, but that's what Michael Burry did. That's what Martyn did a couple months ago live. We did literally a 24-hour show explaining to you why we're going big on that tariff dip, because the numbers, we looked at the numbers, we looked at the PE, we looked at typical S&P pullbacks. We looked at the chart, we put it all together, and we said, well, this is the time. We're going to buy with conviction. And Martyn did it live on the show in front of everyone, and you can see his portfolio, $70,000 swing. And that was all because he bought with conviction. And that risk is, you might not be able to handle that risk. You might be too emotional. And unfortunately, most people are too emotional. Unfortunately, people will panic, and therefore it might not be the right strategy for you. DCA, if you're in the markets are going to go up. Hopefully, that's what tends to happen. And you'll make money. But if you manage to catch a recession, if you manage to catch big dips, if you manage to find companies that are undervalued at that time with whatever calculations you use personally, then that's when people make money, the big life-changing money. DCA, you can DCA. Hopefully you reach the age you want to retire, 55, 65, 67, whatever the age is going to be these days, and you can access your pension, and there you go. You've got, hopefully can survive on it. But if you want real life-changing money, then you might want to learn a bit more. You might want to understand what we mean by with conviction. You might want to invest in yourself, build up the income, and start to understand what market cycles are. Start to understand when something's undervalued, and then that's when you can really see some real difference. But most people won't be cut out for it, unfortunately.
Yeah, it's not easy. It's very simple. It can be simple. If you go to work and £100 a week, you've got $10 left over after your bills, and you just buy the S&P or buy anything really, and you're just using your cash, and you do that over time, and you keep buying a little bit. As long as you didn't buy a business that went bust, you're probably going to be up in 20, 30 years. If you just buy the S&P, you most certainly will be. But is that the best way? Well, no, it's not the best way, but it's the best way for most people, because they don't want to bother. They don't want to read it. They don't want to study any of this stuff. I enjoy it. I enjoy numbers and targets and stuff like that. But also, what is a big danger though with social media, people take things that someone says out of context. One of the worst ones was, I saw it today all over X. I don't know how many times I saw people today posting this. Buffett says, buy when there's blood on the streets. They're talking about all their crypto being down today. Warren Buffett was not talking about crypto at all. taken out of context, but it sells the view, and everyone goes, oh yeah, I remember Warren Buffett saying that. No, you don't. You've heard someone say it on X so many times, you think that's what Warren Buffett said. Warren Buffett was not referring to crypto. In fact, we all know what Warren Buffett thinks of crypto. He calls it rat poison, along with Charlie Munger, who passed away a few months ago. So he wasn't talking about that at all. But it won't stop people saying it because, well, if we quote Warren Buffett, that gives us some kind of credibility. No, it doesn't. You're just making up rubbish and nonsense. Anyway, Sensei,
Sorry, I've just seen Vanessa's comment. I think she's got confused with dollar cost averaging. I just really want to make it clear what dollar cost averaging is. Let me just read Vanessa's comment. She said, when I worked for major companies, they took money from my check and invested it on a basis. For me, I want it. I buy if I want it, and if it goes lower and I want it, I buy it, which gives me an average price. So that just because you've got an average price doesn't mean it's dollar cost averaging. The definition of dollar cost averaging isn't you bought it at one price, you bought it lower, now you've dollar cost averaged. Vanessa, that's not what dollar cost averaging is. Dollar cost averaging is typically when you've got a lump sum in front of you and you decide to average out the price. Another way of looking at dollar cost averaging is every month you buy a specific, or every a specific time frame, you just keep buying. Not just you bought at one price, the next day it was a bit lower and you bought again, now you've got an average price. That is not the definition of dollar cost averaging. Just want to make that clear.
No. Again, we've said this countless times. Most people, nearly everybody actually, that's got a regular job. Let's be honest, most people have got a regular job for an employee, and the employee takes part of their wages and buys a 401k, puts it in there every month, every week, whatever it is, and they just buy regardless whether the market's up, down, or sideways. They just keep buying every single month. Sometimes they might keep some money to the side to cover fees and funds and so on and so forth, but typically they're just taking your money and buying weekly or monthly or bi-weekly or whatever it might be. And over the time, you've had all these different prices, which typically have been going up over time. And if you think about it, I said this to Leah, I said, God, if you could have just not bought for the last 6 months or bought more when the V shape came, your portfolio would be 10 times bigger than it is today. But what most people did, they bought the day before the dip, and then a month later they bought when it was up. They missed that entire section out. And it's been proven, again, with math, science, history, whatever you want to call it, over time, there's a handful of occasions in your portfolio lifetime that if you'd bought on those days and stayed in on those positions, that would define your portfolio for a lifetime. Most people miss them. And they go, well, I've done all right. I've done 10% a year. Yeah, you have. But you could do 10% a year by buying a lump sum and just leaving it, doing absolutely nothing. So you've not really gained anything. You've just bought regularly, and there's nothing wrong with that. What we're trying to do here is to give people another idea, not, because buying weekly or monthly with your job is investing, but it's not really investing. Investing, in my book, the way I look at investing is when you look at something and go, that asset, that thing, that business, that object is undervalued, and I can see that it's going to be worth 10 times that in a year or a month or 10 years or whatever. So I want to own that asset. I don't want to trade that asset. I want to own that thing, that asset, because it's going to grow. And I do that with people. Sensei and Vaz, they are my greatest investment. The time spent working with these guys, being part of this channel, they're worth more to me than my S&P 500 thousands of times, because not only is the value of friendship and human relationships worth more than money, but developing them and being them is part of this business. So financially, they're an investment too. So you can look at lots of things and say, that's got potential, that is currently under what its value, its potential, its opportunity. Let me invest my time or money into it. And time and money are the same thing to me. Time and money are the same thing. My time now is worth about $500 to $700 an hour. I've said this before. This is my time now. So if I spend an hour doing something, it's got to be, it's worth money, not just time. Time and money are the same thing to me. Someone once told me, if you're not earning money when you sleep, you'll work to the day you die. And that's true. Now you might go, well, that's all right for you. You've got a YouTube channel. It makes money 24/7. No, it's the same for you as well. Because if you work a 9-to-5 job, but your money is invested in Apple on the stock market, Apple is selling phones 24 hours a day. So you are making money 24 hours a day. And that's important. People who have a regular job, who put their money in the bank, they will work to the day they die because their money is never working for them when they're asleep. It's working for the bank, which means it's not working for you. But if your money is in Apple, for example, 24 hours a day all around the world, someone's buying iPhones, a little bit of that is your profit. You have to have your money making money 24/7 if you want to retire comfortably, or you'll work to the day you die. Sensei?
Yeah, you're spot on there. I mean, we're in such a privileged time where we can buy all these companies. I mean, back in the day, I mean, even I used to work at an advising company, and I think I was still working there during the dip. And instead of being able to, all these people that had their money when we were managing their money, by the time, even if someone did call us, which they didn't, it should have been our job, but I don't think many people were doing that. But let's say even if a customer called us and said, I want to invest some money, by the time that we got all the paperwork together, by the time we did their risk assessment, all of the stuff you had to do, I mean, there's plenty of regulations here in the UK for advising, but by the time we did all of that, it was a couple of days later, it was a few days later, and then their money would have been invested a few days later. And it's just like, if we have control over our investments, I mean, opportunities like that present themselves, and you can be buying during that crash. And I don't know, probably 10, 20, 30 years ago, it would have been even harder to be buying during crashes. So we're in such a privileged time. There's never been an easier time to make money, especially if you've got an internet connection. I mean, it's just incredible, the access to what companies we have. We've got access to pre-IPOs. We've got access to tiny companies. We've got access to big companies. We've got access to managed portfolios for 0.2% fees. It's just incredible. And I really hope that people take advantage of all the knowledge that's around them, because there is money to be made, and there's never been an easier time to make money, in my opinion.
I think that is great you've said that, mate, because most people today are richer than the richest man 100 years ago in the whole world. We have more opportunity, and we have more stuff and more access. I mean, 100 years ago, the richest man in the world couldn't have gone to see an event the other side of the world, a sporting event or the Olympics. Now we can all watch it on our phones. We have more access today, and I think that's great you mentioned about the stock market, how we can pick up our phone and access a business that just a few years ago we couldn't do. And remember, most people by far still can't. Billions of people don't have access to basic basic services like water or electricity or healthcare or any of these things, let alone be able to buy the stock market. They wouldn't even know what it is. They're barely just getting through to pay to buy some food and keep the shelter, keep the sun off them, or keep the rain from coming in through the roof, whatever. But we can do all that. So, it's insane if you just go back through history and just, look at me here. I'm sat in a gold jacket in a gold studio with gold balloons. It's ridiculous. Talking to the world. 100 years ago, they would have thought I was some sort of wizard or some sort of alien or something like that. And at the click of a mouse or click of a tap of a screen, I can buy shares in a business which is going to sell someone an iPhone in India tomorrow, right now, and I can be owning that business. It's amazing. Yeah, it is. I think people take it all for granted, and I think it's absolutely amazing that we're able. I mean, I'm calling you from the other side of the world, and there's no delay. I'm talking to you, having a conversation. We're learning, we're engaging. I'm able to talk to you and have a friendship with you. And we've said this before. It's quite incredible, our relationship. Sensei is involved in my business, and I've never met him. And he runs the shop. He runs the newsletter. He's got access to my income. He can access my show. He can come on live. He can set up his own shows. I've never even met the guy. Sensei, I mean, when you think about it, though, it's crazy, isn't it? I have more trust in you than most people I've worked very closely with who didn't have the access that you have. And it's amazing. And it's, so we shouldn't take this for granted. And, but then we should also take advantage of it. We have the information today presented to us that we know what institutions were doing today and why they were doing it. And education and knowledge is the most useful, powerful resource. And we knew, at least if you read the information in the newsletter, not the nonsense on X, you knew why they were doing what they were doing. So I picked up my phone and tapped on the screen, turned on margin and borrowed money without talking to the bank manager. Can I borrow another 100 grand, please? I just did it. I just did it without asking anyone. And here we are. I now own some of the XRP and Ethereum and Bitcoin that Cathie Wood sold today. It's true, isn't it? Amazing.
Yeah.
So
very privileged.
What comes next, Sensei? We've got the market still selling off. We're still down. Yep. It looks like we're sort of trying to get, I mean, maybe you could talk and share some technicals, but it looks like from a layman's point of view, and I like to call myself a layman when it comes to the chart, are we building some sort of consolidation there? Are we bottoming out? What do you think, Sens? I'll come back to you. Is the route over, or is there more to come? What do you think?
It's difficult to say. I think this is all firstly driven by the fake news about what the Ethereum story that we covered this morning, and debunked why it was all fake. So that sort of started it all. We did have a double top on Bitcoin at all-time highs. XRP hit its target and now it's selling off. But I think in reality, there doesn't seem too much. What I'm trying to say is I think it's all going to be based on what happens tomorrow and Friday. I think people are trying to front run what Jerome Powell's saying. People are trying to take something off the top in case it goes really bad this week with what Jerome Powell's saying. The stock market is holding up a bit better, but even the S&P 500 was down today. So I really think this is just preparation for Jerome Powell. One is the Fed minutes that come out tomorrow, and the main one is the Jackson Hole. This all really started with the macro information of PPI. We saw quite bad PPI numbers, and everyone's trying to forecast what that means. Well, you can't really forecast what that means yet because we don't have the data to back it. We don't know what CPI is going to be. We don't know what PPI is going to be next month, and we don't know what Jerome Powell is going to say. So I think it's all based on the situation we have with PPI going up. People scared that means CPI is going to go up and it's going to go into the consumer. And then you're going to have an issue where CPI is up, inflation is up, and unemployment's up. And then the Fed's really doesn't, there's a disconnect there, and that will cause panic. That's what is being priced in right now, all starting with Jerome Powell now speaking on Friday. So I think that'll change it all. Right now, the charts aren't looking like, if you're looking in a long-term time frame, like there is any major support where we are right now on XRP. It could certainly bottom at any of these points if the meetings go, if the minutes are good tomorrow and the meeting goes well on Friday. But we do have a lower high, which is not brilliant to see. The next sort of level would be potentially $2.78 for XRP. I've always said August is going to be a sideways month. We're going to range between the lower end of $2.62 and the higher end of $3.40. Going into September, if all is well with inflation, then we're looking at buy the rumor for the ETF news, and we'll see all-time highs on XRP in September. And then in October, we'll have the FOMO of altcoin season, maybe a quick sell the news when the ETFs get announced, but we have multiple altcoin ETFs that we're expecting to get approved. I'm literally 100% confident on that. And I think that could spark altcoin season. So I think it's just a correction that we normally see in October, September. And I think that we will recover quite well, and I think it is an opportunity. There is $2.62 would be the bottom of my range. So if we start going closer to the $2.65, $2.70 range, then I'll be buying more. But I don't think we'll go too much below that unless we get some really bad CPI numbers next month. And alongside with Bitcoin, if we look at the Bitcoin chart, remember Bitcoin is sort of the king of the market. What Bitcoin does, the rest of the market will do. Bitcoin has lost its support at 116,000. We did see that double top on the all-time high. We covered that live on the show, but we are now starting to see support coming close to support about $111,000 on Bitcoin. So Bitcoin is pretty oversold now on the RSI on the 4 hour. If we have a look at the daily time frame as well, it's not oversold yet on the daily. It's got a bit to go there, but I think 111,000 would form some strong support on Bitcoin, and that's not too far away now. So we are looking at maybe another 1% move on 1% move down on Bitcoin, and then we go into the two big things: the minutes tomorrow, and more importantly, Jerome Powell, and that will shape up if this is a going to turn into a bigger correction or if we're going to have a recovery.
Yes, and of course we'll cover all of that. The minutes isn't a big story. I've never noticed it do that much. Because we kind of know we're just seeing the dot plots. We're just getting a sentiment of what was
agree,
said.
but this time round, I think with all the PPI coming in a bit all over the place, and now internally within the Fed, some people are calling for cuts, some people aren't. I think it might give us a bit more of an insight this time round.
Okay. And then on Friday, most certainly, Jackson Hole will be there live for that when Jerome Powell speaks. That'll give us the sentiment for September, and he'll if he's dovish and so on again, but he'll always say the same thing. He's not going to say we're going to cut rates in September. That's never going to happen. But it will give us a good indication. I'm bullish going into this because now I think we've front run this. Now we've sold it off to pump it on the day, and if we don't get anything great, it will just be the same. I don't think we're going down from here. There's too much good news. The earnings was good. I still think the inflation was transitory. I don't think we're going to get more of these. There might be another one, but I don't think it's going to be dramatic as the first one. My take on all of this is it's transitory. It's a one-off thing. Remember, when we talk about prices going up, it's the rate they go up. If suddenly everything jumps, like we saw on the last PPI, the producers' prices, that's the people that bring in the goods into the US. They jumped because of the tariff costs. Trump said there was no cost. Well, of course there was. It got passed on. We all saw that. But if that's now where we are and it doesn't go up anymore, which I don't think it will, then we're good. And Jerome Powell's always said that. He's even hinted that himself. It could be a one-off shock, and then we just carry on going sideways. And again, that would be okay. We can accept that. So let's see what happens. I think, we've sold off too much. I think, especially in crypto, I think we've got more stability now than we've ever had. We've got such good news around the corner with the ETFs and the bank for Ripple in my book. I like that, bigger than the ETF. And because people are hearing that institutions are selling, they've been dumping. But on top of that, people are shorting as well. That's another issue. We've got a lot of shorting going on. Maybe you want to speak to that, Sensei, the shorting position. And also, of course, everybody got over leveraged. Now, with me, with margin, it's just 1 for 1. There's no 10 times leverage. It doesn't work like that with me, with the way I'm buying with margin. But people are doing options, predicting things, guessing. I'm just using my margin to buy the actual asset. I'm not predicting the future at a certain time. I'm just paying the monthly fee or the daily fee as it's calculated on margin. But just 1 for 1. There's no 100 to 1 stuff like that. So a lot of people did that. They over leveraged long positions, and then when it went down by the smallest amount, got wiped out. And of course, that brings the market down. So Sensei, what are you seeing here?
Yeah, there is quite a lot of liquidations happening in the last sort of 12 hours. If you're looking at the last 24 hours, again, it's Ethereum that's been hit the hardest. There was a big push over the last sort of week of people buying into late because of these news stories that were coming out. And of course, institutions bought before that. You bought before the news came out. And since people have been FOMOing in, and Ethereum's been hit the hardest. Over the last 24 hours, we've seen about $143 million worth of longs being liquidated. And funnily enough, we've seen $37 million worth of shorts being liquidated as well. So both sides are getting hurt. But if you're looking at the real-time liquidations here, you're just seeing all sorts of random tokens being liquidated. We've got Fartcoin there. I mean, it's just, there was a lot of FOMO into the markets recently. And it looks like it's just a flush out that hopefully will be the end of this, and there won't be any more cascading liquidations, and then we can go back to business as usual. But remember, once one person gets liquidated, and then it leads to the next person getting liquidated, and then you just get these cascading liquidations that normally, as you said, crypto gets worsely affected by this because of the amount of retail leverage positions and how much you can leverage with crypto. I mean, these exchanges are competing with each other to allow more. One day you've got 50x, then the other exchange has 75x, and now we're up to about 150x leverage you can do on Bitcoin on certain exchanges. So
the only winner is the brokerage.
Yeah, exactly. And at some point that needs to be wiped out of the system so we can go to business as normal. And that's not me saying that today is that day. The charts can suggest you go a lot lower than this, but also with all the good news around the corner, I don't see us going down too much lower. As I said, XRP, I think the lowest we go in this range of in the month of August is $2.62, and I'll certainly be buying with conviction at those levels.
That's another reason why I like the institutions to be involved. You're always hearing about retail gets liquidated. I've never heard of BlackRock getting liquidated. Have you?
No, I mean, there's people getting liquidated on Fartcoin today. I mean, we've got over 10.
You just frozen there for a second. I'll just keep talking until you come back to me. But yeah, I mean, this is why I want institutions involved, because the institutions will prop up the market. You know, if all these retail investors lose all their money, as sad as that is, it's kind of great for me. It's awful to say it, but it's true. I want the institutions to control it because they're not losing their money. They're not getting liquidated. They're just going to buy it back. When all this is settled down, I've been buying it. We all win. Sounds horrible I'm not sitting here going, I want everyone to lose their money. I don't. And as long as BlackRock are okay, that's okay with me. Well, no, of course not. I want all my audience to do well. But at the end of the day, I'm an investor. I'm not a gambler. And if you're doing 150x on any coin, then you did it to yourself. And there's never been a moment on this channel we've ever said or suggested or hinted that's a good idea. In fact, I go the opposite. And I say, if I don't give financial advice, neither does Sensei. But if I could give financial advice, I've even made jokes about it. It would be buy the S&P, nothing else. That's it. Never watch another video. Buy the S&P, you're done. And I've always said I don't encourage anyone to use margin like I do, but I've also explained how I do it. So if you're doing 150x on a Fartcoin, I mean, that's worse than doing Russian roulette. I mean, you might as well just shoot yourself in the head. I mean, it's just ridiculous. I don't know what you were thinking when you were doing that.
Yeah, over 4 million today liquidated with Fartcoin leverage trading. I mean,
yeah, that's just
it's risky enough by itself. It's crazy, and that's sometimes in a bull market you get these liquidation spikes, get rid of all the nonsense, and then business as usual. So hopefully it's just one of those blips, rather than sometimes in a bull market we also do get 25% corrections. It might be one of those situations. It might be a bit more pain ahead, but eventually I think going into towards the end of the year is when it's going to get exciting. It's when it's going to get heated. And typically when you look at crypto cycles, that's when we're looking at the altcoin season, where it will go crazy, but we'll have a plan in place to take those profits and go through it all together in this community we have.
Tim Rogers has just commented, institutions only place a small percentage of dollars into crypto. I don't agree with that. If you look at if you look at the ETFs that we're buying, iShares, BlackRock, they're putting billions into Bitcoin, billions into Ethereum. Now, it might be a small chunk of their entire assets, but it's not nothing. And the reason why I bought BlackRock's ETS was because they actually own Bitcoin and actually own Ethereum, not derivatives and other things based upon the price of Ethereum and Bitcoin. They actually own it. So I don't think it's right to say that institutions, they don't really get involved with crypto. They own the other stuff that they do. They're loading up more of it. In fact, I've spoken to the Bank of America, and I've spoken to Robinhood, and I've spoken to lots of people who are institutions, and they are buying heavily into Ethereum, Bitcoin, XRP. This is not a retail game, and all the sensible people are like standing by watching, going, look at all those idiots, we'll play a little game. No, they're buying it. They're buying it more than we are.
Yeah, they're betting billion-dollar businesses on crypto. I mean, look at some of the treasuries that are coming out. Obviously, we all know about MicroStrategy, but look at the hundreds that have adopted it this month. Bitcoin treasury companies now. And now what's next? Well, Ethereum treasury companies. Just listen to Tom Lee. I mean, I'm sure he doesn't want to go bankrupt. He's putting billions of dollars worth of money into building a Ethereum treasury. And there's many, many more examples. We're seeing XRP treasuries now come about. These are billion-dollar companies, institutional grade companies that are buying up crypto like there is no tomorrow.
Yeah. And I've always made it quite clear, as a value investor, I do believe that crypto will make its way to the top of the S&P 500 in time. So you'll see it up there with the Apples. And remember, Apple and Amazon and Microsoft and Google have Bitcoin on their books. They own it as well. Tesla famously owns it. This isn't just some retail thing and whatever. It's here to stay. And when I realized that, that's when I went in. I'm just seeing some price movement at the moment. Let me just kind of have a little look. Yeah. We got Bitcoin going. That's okay. That's bouncing. I'm not buying any more until it goes to 110. XRP. I bought loads at this level here. Just here today, loads. It's just touching it again. So, okay, that's not to buy there either. Ethereum, not low enough either.
At Brandon_Van Horn donated $2 through a super chat. You and Sensei should finally meet at 100k subs.
We should meet at 100,000 subscribers. That's probably going to happen. Yeah, back to the VU. How do you do? I bought down here today. Used a lot of margin down here today. Bought here. It's up since then, so that's okay. Sensei, it's getting very, very late for you where you are over there in the UK. I want to thank you for calling in and doing this joint show with me tonight. It's been an absolute pleasure. If anyone's got any questions for Sensei or myself, speak now, because I want to wrap this up and let Sensei go to bed. That's a big day tomorrow. The minutes, then we've got the big show on Friday and all the rest of it. We're now at 96,829. We're nearly there. Oh my God. I tell you what, it was, I said to Leah, I want to get there now. I'm going hell for leather. She said, you got to slow down. I said, look, the studio is set up. The balloons I've got many, many more balloons coming in. We've just been testing the balloons out and seeing how long they would stay up. But, the 100,000 should last a month, but we should be there, I'm hoping, within days. So, yeah, I want to get there quick before it all falls down, and I want to move on and move on to the next thing, which will be 1 million. So I'm very focused on that. So has anyone got any questions for Sensei? Are the alerts turned off? Why am I not seeing it?
No, they're on. It came through.
Oh, yes. Oh, did it? You and Sensei should finally meet. Yes, we will be doing that. Thank you, Brandon. Thank you for the super chat. Thank you both. Very informative, says Yolanda. You're very welcome. Thank you. Thanks for the live show this afternoon, says RB. You are welcome. Thank you, lads, says Blue Bus Driver. Thanks for the show. I want to thank all our new moderators. We've added 5 new moderators the last couple of days. So thank you to all of you for accepting that role. It's a huge amount of work for you, so I realise that. But anyway, I think we'll wrap it up at this point. We're going to go over now to the extra channel. It'll automatically take you there. But just before we go, we will mention the newsletter. Sensei, just get very, very quickly mention to everybody the newsletter. The link is in the chat. So if you want to mention that, that'd be great.
Yeah, of course. So the newsletter is your one-stop shop for all the financial news. If this is what we were talking about today, and this is sort of my final thoughts as well. Do your research so you can buy with conviction. There is opportunities that present themselves at certain points, whether it's the S&P 500, whether it's certain businesses, whether it's certain crypto. And if you can understand it and do your research, you might just find your ticket to financial freedom. And it does happen every so often, whether it was Tesla, if you understood it back in the day, whether it's XRP, if you looked at it when we were looking at 30 cents, whether it was S&P 500 on that big correction. There is times where you can make some significant money on the market. And because we're so lucky and privileged to be able to have access to the internet and a brokerage, then then you need to be taking advantage of these opportunities. And one way to start building up your knowledge is by reading the news and understanding what's going on a day-to-day basis. So you start understanding the connection, start understanding what's happening, start putting two and two together. And that's why we created the newsletter. It's one of your, it's where you should be getting your news, because there's so much news out there. Oh, I hit my microphone. There's so much news out there. There's so much fake news on X. There's so many different news platforms you can sign up to. I sign up to all of them and I bring you the best news. So I bring you 5 top stories. Sometimes there's bonus stories. I give you the one big move. I give you the money move of the day. I give you the one deep dive story. We really dive deep into important subjects: crypto reviews, stock reviews, macro conditions, the financial calendar. So every week you can see what's coming up, and you get the chart of the day. You get that every single day into your inbox. And I guarantee you, if you start reading that newsletter every single day, you start engaging, asking questions, jump into the community that we have on Substack, then you will start understanding patterns. And it is a way to start earning some more money. So go and check it out. There is a 1-week free trial. It is pinned in the comments right now, and do check it out. We do put a lot of work and effort into doing that, and we're always looking to improve it.
You do a great job. We're also going to give everyone the chance to win $1,000 of XRP plus many more prizes now for everybody who wants to get involved. So I'm going to pin this to the top now. XRP $1,000 giveaway. Just write that in. And here is the link. I'm going to replace the pin with this link. Let me just correct the way I spell giveaway. That's better. Add that in there, pin that to the top, and drop it in a couple of times. You can win $1,000 of XRP completely for free. No purchase necessary. Free to enter. Free for all. We're going to give it away on September the 15th, live on the show. But to go one step further, we're giving away tons of other prizes now as well, just because we can and we want to thank all of you. And how you can win all those prizes, I'll give you a little glimpse of stuff that might be available. Let me just show you on the merch stand. This is about to get upgraded a lot further. We got some mugs and we got some bits and pieces. Look, we're going to give away some what are they called? Gift cards and prizes, as well as our big star prize. So please do take part in this. And how do you win these? Tons of you can be involved in this. The main big prize is one, but the rest of it, there are loads and loads of prizes we're going to give away, and we are measuring your engagement. So basically, we're measuring your engagement by you liking. Oh, Sensei, you frozen again, or you're just keeping really still? You were just keeping really still there.
I saw quite a nasty comment in the chat, so I was saying if I should block them or not. But
oh dear, yeah. What do they say?
That's why I was giving my evil eyes to that person who put that comment.
Yeah. Oh my gosh. Yeah. That's it. Yeah. Do you feel that you are oppressed by King Martyn, Sensei? Do you feel that I'm beating you down? Yeah, he doesn't really want to be here. I told him he had to be. He's going, I want to watch the telly with my wife. Do I have to go? Yes, you do. You can see on his face, he's tortured. He hates it. Yes, how can you claim all the other gifts and prizes? Well, very, very easy. Go to my X account, Sensei's and Vaz's as well, and you just like everything and share. And we're measuring all the engagement, and it's wonderful because people are like reposting. Look at this, 76 reposts, 100 likes, every single thing now. Everyone's reposting and liking. So just go down the list and I can measure you because I can see here my analytics measure people, and people stand out to me as well. I go, oh my gosh, this guy has just liked 5,000 things. Look, Michael Wyatt reposted 4 of your posts. I can see Michael Wyatt always liked things as well. And the analytics measures all of this, so I can see who's doing great. And we're going to then reward you guys as well, because we want to say thank you. Because as we approach 100,000, I thought it would be nice to give back as much as we can to everybody. Free to enter, free for all, no purchase necessary. You haven't got to buy anything. You haven't got to download anything. It's all there. So please, get involved. All right. I think we've done that. Sensei, thanks for being here tonight. It's time to let you go. I will see you back in the morning. Sensei is not here in the morning. There's no show from Sensei tomorrow morning. I will go live at the normal time. We'll cover the minutes. We're trying to do some reviews now. As soon as there's no news going on, I'm just going to spend the whole day, because before we get to 100,000, I want every single review done. There's about 12 on the list. I want to get every review done for everybody. So another way to celebrate you guys is get all your reviews done. And also, we'll be covering, of course, on Friday, the Jackson Hole with Jerome Powell. And I'm sure, Sensei, if there's any news, anything breaking with crypto or anything else that he thinks he can cover, he will go live with that as well, and we'll bring it all to you. Final thoughts from you, Sensei, tonight?
Just when you read a headline, just be careful. Dive into it a bit more and understand what's going on behind the scenes. And that's what we did with Ethereum. Be aware of what it can do for the sentiment, but also be aware of what the actual news is underlying.
Great. Thank you very much, Sensei, for your time. That's it from me. We'll end now. It'll automatically take you to the extra channel. Go and take part on X, like everything, repost everything, earn some points, and take part in our $1,000 giveaway. That's it from me. I'll see you all back in the morning. The studio is just waiting for those few more 1,000 subscribers. And I promise you, the biggest, best 100,000 subscriber celebration you've ever seen on YouTube. Lots of people have done it, but they've never done it the way I'm going to do it. You can see already I'm ready, and there's much more to do. So join me for that. Become a member of the show. And that's it from me. Sensei, love to your wife. Go and get some sleep, and good luck wherever it is you're doing tomorrow. And I will see you back on the next one. From all of us, until next time, as always, take care of yourselves.
And each other.
Ta-ra for now. Bye-bye.